Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, brought to you by, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning to all. Today is Thursday, 14th of September. 14th of September. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, so leverage trading is risky. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, so now, as usual, these are the three takeaways from our daily dose of market insights. Will be a recap of what happened yesterday, key events to look out for today in terms of corporate news as well as economic data, and also the key short-term technical outlook that I will share with you on the various asset classes that are actually exhibiting interesting configuration. So without further ado, let us kickstart. Okay, so what happened yesterday? So yesterday there was a release of that US CPI data. So US CPI data is rather, I would say that it's kind of a not really that hot, but we got to be a bit cautious. Later I'll show the data is that there are certain elements that are showing that higher oil prices in the last 2 months has started to creep up into certain inflationary pressures that are actually getting a bit heated up on the US economy. So that actually should keep the Fed very likely to have a higher interest rate for a longer period of time. So in terms of market performance wise, the benchmark US indices is rather mixed. It ended the session rather mixed. The weakest are the Dow Jones Industrial Average and the Russell. So the Dow Jones ended the session yesterday with a negative 0.2% loss. The Russell 2000 is the worst performer at negative 0.78%. The S&P managed to have a slight gain of 0.12, and the Nasdaq managed to actually be the top performer with a gain of positive 0.38%. So very likely one of the reasons the Nasdaq is gaining is due to we call it a rather short-term recovery seen in the US technology sector. So later I'll share the heat map of the S&P 500. So what's interesting over here is that the other component within the tech sector in the US actually managed to recover prior to previous day session on a Tuesday. I would say that yeah on Tuesday, the US technology sector was pretty much hit due to a lackluster performance of the Apple share. But however, yesterday's US technology sector has much recovered, but this is pretty much likely to today's we call it ARM IPO that will actually start trading today on the Nasdaq. So later I'll share you about the ARM IPO. So ARM is one of the key major semiconductor, or I would say that chip manufacturer in the entire we call it semiconductor global supply chain. It has started to actually list on the US stock market today. All right, so without further ado, now let's take a look at the numbers of the US CPI data. So let me focus more on the screen instead. Okay, let me expand my screen so that you all could see much more clearer. Okay, so this is the US CPI data that came in yesterday. So I could see over here, right, that that month-on-month inflation data came in within expectation, 0.6%, but the year-on-year rate actually came inch up slightly higher, 3.7%. But what's interesting over here is the core month-on-month. So the core rate month-on-month actually increased slightly at 0.3% above last month at 0.2%, and also above consensus at 0.2%. Okay, so they came in rather slightly hotter, but the core rate year on year is almost on par, the same. So I would say that it's still not really that hot yet, but we got to be a bit mindful, especially on the core rate that is actually starting to actually inch up higher. So you look at the core month-on-month rate over here, we could see that the trend has started to actually pierce upwards and this pacing upward is pretty significant comparatively against the prior 2 months of June and July. All right, so it seems to me that energy prices the last 2 months has trickled down towards the rest of the wider sphere of the U.S. Economy, and causes other prices in the CPI basket to actually inch up on a month-on-month basis. Month-on-month because it take into account of the recent price changes, the most recent price changes of the basket of the CPI item. All right, so something to take note of. So, but for sure, the pricing of the interest rate in interest rate futures on the Fed funds futures, no change. So still expecting the US Federal Reserve to maintain status quo this week with one more terminal hike of 25 basis point to bring the Fed funds rate to 5.5% to 5.75%, either in November or December. Then thereafter, potentially we may start to see the first cut to come in June to July next year. So that's pretty much unchanged in terms of the pricing. So what we could see over here is this is the end of what happened in the US performance on the S&P 500. So what we could see over here is that we start to see a sea of green in the technology sector, especially the semiconductor, given the fact that of this, perhaps you start to see the new what call hype up during the anticipation, and thereafter, after today's, pretty much important to see how it perform. Will it be faced the balloon like Apple, where Apple product launch took shape? Then thereafter, the earlier gain starts to actually dissipate. So Apple continued to be pretty weak ahead of continue their weakness right after their new product launch event on Tuesday, negative 119%. So then this is the key news that we are looking at, is this ARM IPO. So ARM IPO actually prices at $51 a share. So that's actually the top of the range. So due to this higher pricing, is the key one. I believe that is the key catalyst that actually kind of created a positive feedback loop into the rest of the semiconductor space in US and spreading over to the rest of the technology space. But however, Apple didn't manage to actually buy out, took a leave of this bullish sentiment, which is I would say that is a rather bearish omen, given the fact that Apple is the biggest weightage stock inside the S&P 500 and the Nasdaq 100. Okay, so now we are so this arm over here is that it will actually start trading today. So pretty much interesting to see how the performance of ARM later during the start of the US session. All right, so now with that, what are the key news to look out for? Okay, before I talk about key news, there's one more news I'll share with you. It's much closer to Asia, is the Japan. So you all recall that in my earlier call this start of this week, there's this current we call it quietly exit comment made by this guy, BOJ Governor Yuda, over the last weekend, stating that there is actually a high possibility that BOJ might solely exit its ultra dovish policy. So that actually causes the dollar yen to knock down at the start of this week by 2 big figure on Monday from 147.90 key short-term resistance level. So later we take a look at the chart how dollar yen is performing. So there's this new by Nikkei Asia, is one of the English media in Japan, a major one, but it's English. So there's actually right now a poll being done by this we call it Nikkei Nikkei Asia, stating that right now there is various what we call analysts and economists now stating that it could be early to 2024 that Japan BOJ will start to exit off from its negative interest rate due to political pressure. And bear in mind, yesterday the current PM actually unveiled a new Japanese cabinet. So right now, due to the fact that this new cabinet will try to actually win a mandate in the election next year. So currently, one of the key aim of current PM cabinet in Japan is to actually reduce the cost of living in Japan due to the fact of higher inflationary pressure. So they may actually start to put a bit of pressure on BOJ to actually starts to be less dovish, to actually help to actually negate cost of living pressure in Japan. So something to look out for, especially coming towards BOJ meeting in December towards, I mean, in December, whether there will be a potential change in stance of their current decade plus of ultra dovish policy. So bear in mind, BOJ is the only central bank right now if we in the G20 that is still having negative interest rate. All right. So now, what are the events to look out for today? So for today, right, we definitely have the key event to look out for will be ECB. So if you look at ECB meeting later, will be out at 8:15 p.m. Singapore time. Then thereafter, you have the press conference at 8:45, which is equally important as well. So during this press conference, ECB Lagarde will actually give a bit of we call it explanation in the ECB decision later, and as well as today's ECB meeting will actually release their latest short-term to medium-term key economic data projection. So it's something like the dot plot. In fact, they call it the dot plot in Eurozone. So bear in mind that yesterday I shared with you all there's actually a source that's being reported by Reuters saying that the 2024 projection that are going to be released today, putting inflation above 3%. So that's actually above ECB target of 2%. So what it means that if this scenario takes shape, it means that Eurozone inflation would be much more stickier than expected. And this above 3% projection that is being reported by Reuters from this source, there could be a potential chance for today. It's actually above market expectation of 2.7% projected, and also much higher than the 3% projected in June, okay, during the meeting in June. So something to be aware of. So it seems to me that due to this fact that over here is that with that slightly hotter US CPI print and this potential ECB upgrade of 2024 inflation forecast today, that netted out, we start to see a much more sideways movement on the dollar yesterday rather than a pure straightforward dollar strength that is taken into play. So now, and also another news flow coming out to Asia is today later at tonight 10 p.m. Beijing time, that means Singapore time. Country Garden, you all know what's Country Garden. Country Garden is a major Chinese developer right now that is at the crux of this we call it liquidity crisis in China, that is potentially could actually create a systematic risk, and also something that market participants to be aware of, because in the recent week or so, they managed to actually kick the can down the road by actually allowing by what you call allowing their bond holders to actually delay their payment, so to prevent what I call a default. So today there will be another vote by note holders of the onshore bond to actually decide whether they want to extend their repayment that is actually due this week. So something to be aware of as well, that could actually see a bit of a volatility movement during tomorrow Asia session, okay, when the China market kickstart over here. So what we could see over here is a bit of a volatile move today and tomorrow. Events that could actually kickstart volatile move. One is the ARM IPO performance, ECB, as well as this Country Garden vote that is going to actually kickstart that going to have a deadline at 10 p.m. Beijing time today. Right, so now with that, let's take a look at the technical chart now. So let us start with the FX space first. So with the FX space over here, so this what happened in the dollar index. So over here, you look at the dollar index, right? It actually traded almost sideways yesterday. So far the price action has refused to clear last Friday high. So that's why we have conflicting factors at play at this point in time. Some factors are dollar positive. Like yesterday, the US inflation should be dollar positive, but due to the fact that ECB, we call it chance of upgrading its inflationary forecast for next year, so that knock off a bit of dollar bullishness that causes it to trade sideways. Okay, so now if let's take a look at the chart of the ECB euro dollar. So you look at the euro dollar yesterday, we highlighted euro dollar yesterday in short term for that potential bullish bias holding above that 1.0707 key short term pivotal support. Yesterday price action managed to actually almost bounce off it and traded pretty much positive. So this long-legged candle is actually due to the release of that CPI data. So overall, it seems to me that price action on the euro dollar continue to trace higher low, and the RSI also managed to hold inch up above the 50 level, indicating to us that there is still some short-term bullish momentum inside in play for the euro dollar. ahead of the ECB meeting later. So for sure, we'll be still using that 1.0707 as the key short-term pivotal support to maintain this short-term bullish bias for a test on the next intermediate resistance, which is also the upper limit of this short-term ascending channel that is in place from 7th of September low at 1.0785/1.08 level. All right, but however, if we start to see a breakdown below 1.0707, then this short-term bullish bias will be invalidated to see a test at the next support at 1.0670, which is, if we go to the daily chart, which is this key medium-term swing low area at 30th of May and 7th of June this year. All right, so still maintaining that short-term bullish bias on the euro dollar. So very quickly on the sterling dollar, on the 1 hour chart, still no change. Price action also did that push down, tested that 124.45 key short-term pivotal support, which is the 200-day moving average, before bouncing up higher throughout the US session. So still using that 124.45 key short-term pivotal support level to maintain that short-term bullish bias for a for an inch up to retest this intermediate we call it resistance level at 25.50 on the sterling dollar. So however, a breakdown below 24.45, then this short-term bullish bias will be invalidated to expose the next support at 123.40. Then now last quickly go on to the sterling, no, sorry, on the dollar yen. I share with you all. Still recall that dollar yen on Tuesday, we have that 147.90 level as a key short-term pivotal resistance. So price actually almost wants to inch up higher, but upon hitting that 147.90 key pivotal resistance on the dollar yen, price going to inch downwards and traded much lower in today's Asia session. So still no change, still maintaining that short-term bearish bias, holding below 147.90, looking for a test at least at the 20-day moving average at 146.30 in first step. But however, if we start to see a break up above 147.90, that will invalidate our short-term bearish bias on the dollar yen to see a squeeze up towards the key medium-term resistance zone of 148.40/148.85 level. All right, so that's more for the FX space. So it seems that FX space, we see a bit of dollar weakness coming back into the anticipated dollar weakness coming back into the picture, provided that the key pivotal levels holds that which I highlighted earlier. Now, one more, before that, one more pair we'll look at is the Swiss yen. So this Swiss yen also pretty much interesting on the highlight. It's a cross pair, that means the Swiss versus the yen. So we also start to see a bit of yen strength coming back into the Swissy cross rate of the Swiss yen, especially when price reacted off this pullback resistance of that former medium-term ascending channel support that has been taken down since 11th of September, this Monday. Retest it, inch much lower during the Asia session, and also reacted off negatively that 20-day moving average. So this is the 1 hour chart. So I'll be using 165.60 as a key short-term pivotal resistance on the Swissy yen to actually look for a potential push down to test the next support level at 163.80, which is also the 50-day moving average. However, if we start to see a break up, a clearance above 165.60 pivotal resistance, then this short-term bearish bias will be invalidated to see a test at that range resistance that is in place since 22nd of August at 166.60 level. All right, so we are with that. Let's wrap up for the FX short-term technical outlook. So now let's go on to the major indices. So for the major indices, let us start with the US indices first. So for the US indices, yesterday we have a bearish bias on the Nasdaq 100 below 15,550 key short-term pivotal resistance. Price action came down, almost hit the short-term we call it support level that we highlighted, which is at 15,170 before it staged that bounce up throughout the US session. So right now in Asia session, it managed to inch up higher towards the high of the US session yesterday. So still maintaining that bearish bias at below 15,550 key short-term pivotal resistance. So as long as this level holds, potentially we may see another push leg down to test that 15,170 support level. But however, if we start to see a clearance above 15,550, then a continuation of this squeeze up towards 15,630, followed by 15,800, which is the ascending channel resistance over here from 18th of August low, this ascending channel resistance, as well as confluence with the 29 July swing high as well. All right. Then on the Dow Jones Industrial, the US Wall Street 30. So the US Wall Street 30 yesterday it actually managed to hit our key support level, which is that bearish bias that we have, short-term key support level, that bearish bias we have at 34,520 before it bounce out. Notice the bounce is rather lackluster compared to the Nasdaq 100. So given the fact that I think the Nasdaq 100 is actually anticipating that IPO, we call it performance later. So so for the Dow Jones Industrial or the US Wall Street 30, we're still using that 34,890 as my key short-term pivotal resistance to maintain another bearish bias scenario for today, looking for a retest at 34,520, a breakdown below it potential sees the next support level at 34,335, which is defined by that minor swing low of 7th of September. So however, if we start to see a breakup above 34,890, then this short-term bearish bias scenario will be invalidated to see a push up to test the 30th of August swing high at 35,050 level. All right, for the US Wall Street 30. So now moving on will be the German 30. So for the German 30, right, if we call that yesterday, we have that bearish bias to see expecting it to hit down that 15,570 support level that we highlighted yesterday. It hit as expected, then thereafter it shaped a bounce. So notice that how the price reaction is that it hit this level, price start to shape a kind of a lower low, but the RSI has started to shape a higher low or start to inch upwards. So indicating to us that this bullish bias, bullish divergence condition has been surfaced on the hourly RSI, indicating to us that this short-term downside momentum has starts to wane off, and potentially we may start to see a bounce as well. And where it bounced off from a pretty significant range support level, which is being defined by the low of 21st of August, 25th of August, as well most recently 8th of September. So I'll be using 15,570 given the we call it the sighting of this bullish divergence on the hourly RSI to actually looking for at least a potential bounce, a corrective minor bounce towards the resistance at 15,780 level for today. So maximum 15,850, which is the swing high of 11th of September. So that is the current week high as current week high, this week high as well. So flipping to a short-term minor corrective bullish bias holding above 15,570 key short-term pivotal support for today, looking for a test at the intermediate near-term resistance of 15,780. However, we start to see a breakdown of 15,570, then this short-term minor corrective bullish scenario will be invalidated to see a continuation of the push down to test that 200-day moving average, which is also the confluencing with the support level at the swing low of 18th of August at 15,470. All right, then quickly moving on to the Hang Seng or the Hong Kong 33. So Hong Kong 33 still no change. Price action still refused to break above the neutrality upper limit of the neutrality zone at 18,290. So still looking for it to trade sideways between 18,290 and 17,790 for today on the Hong Kong 33 index. Okay, so very quickly, lastly, the Japan 225. So you look at the Japan 225 over here is that, like I recall earlier on, now the movement of the dollar yen, the direct correlation of the dollar yen and Nikkei 225 or the Japan 225 is no longer valid. That means we need not see further yen weakness to drive further strength in the Nikkei 225 or the Japan 225. So the Japan 225 over here managed to actually inch up above the 5-day moving average, going to trade above a series of higher high and higher low. RSI also managed to shape higher after the appearance of this bullish divergence, where the price action tested on Monday at the 50-day moving average and start to inch higher. So positively, it managed to reintegrate back above that former descending range resistance. Previously, there was a whipsaw below it. So all in all, it seems to me that a bit of short-term to medium-term bullish momentum has started to creep back into the Nikkei 225 after 2 to 3 days of what I call sideways movement, or what I call a whipsaw movement. So for today, I'll be using 32,770, which is the 5-day moving average, as well as this former resistance turns into a pullback support level, also at 32,770 as my key short-term pivotal support, looking for a further potential a push up to this to we call it this bullish short-term bullish buyer scenario, to retest the last Wednesday and Thursday swing high area at 33,300, followed by the next resistance at 33,490, which is the swing high area of 1st of August. But however, if we start to see a breakdown below 32,770, then we will start to see another round of we call it a whipsaw range configuration, range movement to retest the 50-day moving average at 32,500 level. All right, so with that, I'll end today's session. We have already reached the 27-minute mark, so do have a great day ahead, and we shall speak again tomorrow. Thank you.